Everyone, hope you're doing well. It's Jonathan Holland, founder and CEO of Curexe. I just wanted to do another quick market update for you guys for the US dollar to Canadian chart. Trader basically where the price movements for the exchange rates happen are from traders. Traders are looking for short-term profits and they look for patterns in the charts in order to buy or sell currencies. So I just want to show you an example of a trend line that gets formed. This is back over in 2014, and you'll see there's this psychological level that the trend actually bounces off of. What that means is that traders are buying at the support level and trying to sell it for a higher price. So they'll buy it closer to the black line here, wait for it to climb higher, and sell it for their profit. And you'll notice that pretty consistently this trend line has stayed true over almost a 2-year period here, until coming in around early 2016, first quarter 2016, where we had a breakout to the downside. Now, when you have a breakout of support, all that means is there's some economic news that's came out, some reasoning as to why the US dollar would start to become weaker against the Canadian dollar. And because it breaks through the support line, traders actually look for a new bottom to form at some point. So this is a bit of the Wild West at that point. But when a new bottom starts to form, then you can map out a new support line and new trend lines. Now, usually when a support breaks out to the downside, that becomes what's called the resistance level. And a resistance level is just a psychological level where traders sell that currency. So there'll be a lot of downward pressure on it. But I'll give you an example. Like after it did have this breakdown to the downside, it formed a new bottom around this area. And traders were able to trend out another support line that has actually been pretty favorable. For over a year now, it's favored fairly close to the trend line, which means that buyers are willing to purchase closer to the black line and selling for a higher price as well. And you'll notice that there was a pretty strong resistance level that was being formed here. So, the trend would come up, but then it would hit this kind of psychological level. Traders would get spooked and they would start to sell the currency. This happened a couple different times and then even tested higher here, which almost looked like it was going to be a breakout to the upside, which would be a driver to push US dollars higher. But we noticed that it had some weakness and it came down and then blew out of the support level. Now, around this time, this is when the Bank of Canada announced that they were going to raise central bank rates. And when you raise interest rates at the central bank level, it actually increases the value of the country's currency. So in this scenario, it actually increased the value of the Canadian dollar and sent the US dollar against the Canadian dollar plummeting. And that's why we've had a breakout of this support level. So now the market's looking for another psychological level to have that support. It might be this area. It might continue to climb down. It's very hard to tell at this point. But all that we do know is that if you're holding US dollars, you're going to want to look for the new resistance line, which would be this old support line here that it broke to the downside from, to be able to sell your US dollars. So you want to almost wait for a little bit of a bump if you can and try and sell your US dollars closer to this black line. You're never going to time the markets perfectly. You don't have to worry about that. If you'd like, you can contact me. We can set exact exchange rate alerts that you're looking for, and we would be more than happy to send you alerts when the exchange rate's gotten to a level that you think is nice. This is for people that have the luxury of holding US dollars and selling it when they need to, but they have time to sit on it. For those of you that have Canadian dollars and that just need to make payments internationally, whether it's in euros or British pounds or US dollars, what you're going to want to do is wait for Canadian dollar continued strength. And at times around this, it would be a better time to exchange your Canadian dollars to US dollars to make your payment. So it's actually a better time almost right now if you're exchanging Canadian to another currency. And if you have US dollars, it'd be great if you can hold off. At some point, it's probably going to test somewhere closer to this new resistance level, and then you'll have a better opportunity to make more money off the money that you're earning from either revenue or keeping more of your money that you're paying out to suppliers in other countries. So if you guys have any other questions, I'd love to have a conversation about it. You can reach me. I'll put my email in after this video and my phone number. Go ahead and give me a call or send me an email. I'd love to have a conversation about technical analysis, currency exchange in general, and I'd love to be able to help you guys out in any way. Thanks so much.